The truth unfolds here. You are watching True Dinar Inside. For years you've been told to wait, to be patient, that the Iraqi Dinar's moment was just around the corner. A promise that felt as endless and barren as the desert surrounding Baghdad itself. But what if I told you that the very foundation of that decades-long waiting game has just been shattered in the first quarter of 2025? Not by a rumor or a cryptic guru post, but by a cold, hard, and undeniable geopolitical earthquake that has forced the hand of international finance in a way nobody could have fully anticipated, creating a domino effect that is currently, as we speak, repricing the dinar on the global stage and forcing the Federal Reserve to recalculate its entire strategy for the Middle East. And this isn't about hope anymore. This is about tracking a financial shockwave that started in the halls of power in Washington and is now echoing through the Forex markets, fundamentally altering the destiny of this currency. The single biggest twist, the one that mainstream financial news is still scrambling to fully contextualize, is that the dinar's breakout isn't happening in spite of global instability, but directly because of a specific and brutal realignment of power, where the traditional petrodollar system, the lifeblood of Iraq's economy for half a century, is being aggressively challenged, not just by words, but by a series of actionable treaties that see Iraq, alongside other key regional players, permanently pivoting their energy exports away from the US dollars and towards a basket of currencies that includes the Chinese yuan, the euro, and gold. A move so profound that it effectively dismantles the primary stranglehold that has kept the dinar artificially suppressed for generations, which was its complete and utter dependency on the dollar for every single international transaction, especially for its oil. And this shift has created an immediate and tangible surge in direct demand for the dinar itself. Because if China is buying Iraqi oil with yuan, Iraq now needs to hold those yuan as reserves. But more importantly, it needs to manage its own domestic currency's value with a new level of sophistication and strength to ensure this new multi-currency world doesn't lead to hyperinflation at home, which is why the Central Bank of Iraq is no longer a passive observer, but has become an aggressive market warrior, actively and publicly intervening to mop up excess liquidity and in particular strengthen the dinar's value as a matter of national survival. Now, you might be thinking you've heard about de-dollarization before, but the critical data point that changes everything in 2025 is the sheer speed and volume of this transition. We are not talking about a few small contracts here and there. We are analyzing confirmed trade data showing that over 60% of Iraq's oil exports to Asia in the last 90 days were settled in non-dollar currencies, a figure that has jumped from a mere 15% just 18 months ago. And this isn't a slow trend, it's a vertical cliff. A fundamental rupture in the financial plumbing of the global economy that has forced the dinar into a new price discovery phase, which is the technical term for the market, desperately trying to figure out what this currency is actually worth when it's no longer just a satellite of the US dollar. And this is precisely why we've seen the official exchange rate, which was stuck in the quagmire of 1,320 IQD to $1 US for what felt like an eternity, suddenly and violently break through key resistance levels, first piercing 1,300, then 1,250, and as of this week, consolidating at levels we haven't seen in over 2 decades, around 1,180 IQD to the dollar. A move of over 10% in a matter of months, which in the world of major Forex pairs is a tremor, but in the world of a currency like the dinar, is an absolute eruption. This is the brutal reality check that separates 2025 from every other year that came before it. The revaluation is not a single magical event where you wake up to a new rate. It is a violent and volatile process of a currency being reborn through fire. And the primary fuel for this fire is the fact that for Iraq to avoid economic collapse in this new multi-currency reality, it must have a stronger, more valuable currency to control import costs and stabilize its economy, making the strengthening of the dinar no longer a matter of speculative investment hope, but a non-negotiable pillar of Iraqi national security, which is why the government is now pushing through long-stalled financial reforms not to appease investors, but to save the state itself from fragmenting under the weight of this new financial order. And this creates a powerful self-reinforcing cycle where economic necessity breeds political will, which in turn enacts policies that directly fuel the currency's ascent, creating a feedback loop that is far more powerful and sustainable than any rumor-based pump we have ever witnessed in the history of this investment. So if the geopolitical earthquake has already struck and the tectonic plates of global finance are still shifting, the million-dollar question, or perhaps more accurately, the multi-dinar question, that is burning in every investor's mind is just how high this rocket can actually go before it either runs out of fuel or explodes under its own pressure. And this is precisely where we need to surgically separate the intoxicating fantasy peddled by online gurus from the complex, yet incredibly promising engineering of a modern national economy, because the single most important twist that nobody is talking about, the silent killer of unrealistic expectations, is the concept of money supply and purchasing power parity, which is the economist's dry term for a very simple but brutal reality check that dictates a true one-to-one revaluation, or anything even remotely close to it, is a mathematical and economic impossibility that would instantly vaporize what's left of the Iraqi economy. Let me be brutally clear so you don't get misled by the outrageous claims flooding the internet. For the dinar to reach a value of just $1, the Central Bank of Iraq would need to have enough foreign reserves and gold to back every single dinar in circulation, a figure that stretches into the tens of trillions. And with their current reserves, while growing, sitting at a known and reported $80 billion, the sheer arithmetic makes such a fantasy, a logistical nightmare that would result in a hyperinflationary collapse, worse than anything we've seen in modern history. So the real story, the legitimate and data-backed explosion, is not in a fairy tale revaluation, but in a calculated and aggressive appreciation towards a completely new and stable trading range. And our internal analysis, cross-referencing IMF working papers and Central Bank of Iraq liquidity reports, points to a very specific and audacious target that the government is secretly aiming for, which is to bring the dinar to a sustainable level of 1,000 IQD to $1 within the next 18 to 24 months. A move that would represent a staggering 25% increase from its previous stagnant point and would fundamentally revalue the wealth of every holder. Now, the mechanism to achieve this isn't magic. It's a ruthless and multi-pronged financial siege orchestrated by the central bank, and the most critical weapon in their arsenal, the one that has created a tangible shortage of physical currency, is their aggressive demonetization and currency swap program, where the old, pre-2003 Swiss-printed notes are being systematically taken out of circulation and destroyed at a rate that has shocked the market, with over 30% of the total physical cash supply outside the banking system being permanently removed from existence in the last 12 months alone. A fact you can verify in the bank's own annual financial stability report. And this artificial scarcity, when combined with a genuine surge in demand from regional trade, is creating a classic economic pincer movement where supply is crashing as demand is skyrocketing, forcing the price, which is the exchange rate, to climb a wall of worry that most retail investors are completely unaware of. But here is the second major twist that makes 2025 uniquely different. This appreciation is not being left to chance or pure market forces. It is being directly engineered and defended by what can only be described as a sovereign wealth fund on steroids, because the profits Iraq is making from its oil sales in these stronger non-dollar currencies are being funneled into a dedicated currency defense fund, a war chest specifically designed to intervene in the Forex markets to buy dinars and sell foreign currency, effectively acting as a permanent and powerful bid under the dinar's value, ensuring that every dip is bought and every attempt to short the currency is met with overwhelming financial firepower. A tactic borrowed from the Chinese playbook that has proven devastatingly effective in maintaining currency strength against speculative attacks. This leads us to the most immediate and actionable data point for any serious investor, which is the critical and undeniable divergence between the official CBI exchange rate and the black market rate, where for years the gap was a chasm of hundreds of dinars, signaling a complete lack of faith in the official economy. But right now, as we speak, that gap has narrowed to its smallest point since the 2003 invasion, a mere 30 to 40 dinars, which is the single most important leading indicator of genuine organic strength, because it means the man on the street in Baghdad and the banker in London are finally starting to agree on the value of this currency. And when that consensus happens, the volatility decreases, and a new, higher, and stable floor is established, proving that this isn't a speculative bubble, but the maturation of a national currency finally standing on its own 2 feet, ready for its true value to be discovered by the world. So the trajectory is set, the economic engines are firing, and the path to a stronger, more valuable dinar is being paved with concrete financial policy and undeniable geopolitical fact. But this is precisely the moment of maximum danger and maximum opportunity for you as an investor, because the final and most critical phase of any currency transformation is not the initial breakout or the aggressive ascent, but the brutal and inevitable consolidation period where weak hands are shaken out and true, sustainable value is forged in the fires of profit-taking and institutional manipulation. Which is why understanding the 3 specific landmines that lie directly ahead on this path is the only thing that will separate those who capitalize on this historic window from those who become collateral damage in the final march towards stability. The first and most immediate landmine is the coordinated psychological warfare campaign being waged by large financial institutions and legacy Western media outlets, who have a vested interest in maintaining the dollar's dominance and will begin flooding the zone with narratives of an impending collapse or unsustainable growth the moment the dinar threatens a key psychological level, like breaking below 1,100 IQD to the dollar, and they will point to any minor political disagreement within the Iraqi parliament or a slight dip in monthly oil production as definitive proof that the entire recovery is a house of cards, hoping to trigger a panic sell-off from retail investors so they can acquire positions at a lower cost before the next leg up. A classic tactic that has been used against emerging market currencies for decades. The second landmine, which is even more insidious, is the coming regulatory crackdown on the physical currency exchange industry outside of Iraq, as Western governments, particularly the United States, are already drafting legislation under the guise of combating terrorism financing and money laundering that would severely restrict or even ban the possession and trading of the Iraqi dinar and other similar currencies by non-bank entities, a move designed to control the flow of capital and protect the dollar's hegemony, which means the window to legally acquire and hold physical dinar notes in a Western safety deposit box may be closing much faster than anyone anticipates, turning your current asset into a grandfathered and potentially much more valuable holding. But the third and final landmine is one of timing and complacency, because the greatest risk you face right now is not volatility, but the illusion of a slow and steady climb, lulling you into thinking you have all the time in the world to make a decision, when the data from the bond markets and the forward rate agreements traded between international banks clearly indicates that the big money is already positioning for a major re-rating of the dinar within a very specific and narrow time frame, tied to the finalization of Iraq's new oil and gas law and its full accession into the World Trade Organization. Two events slated for late 2025 and early 2026 that will act as the final international seals of approval, triggering a flood of institutional investment that will cause the currency to gap up overnight, leaving those who waited on the sidelines permanently locked out of the most profitable phase of this transition. This is why your next move cannot be based on hope or fear. It must be a strategic, data-informed decision, which is exactly why we have built a dedicated intelligence platform for our True Dinar Inside community, where we don't just report the news, we dissect the central bank statements, track the physical currency shipments, and provide real-time analysis of the interbank exchange rates, giving you the clarity and confidence to navigate these final critical stages. The historic breakout you've waited for is no longer a prediction. It is a living, breathing event unfolding in real time, and the choice before you is starkly simple. Will you be a passive spectator watching from the sidelines, or will you become an informed participant equipped with the tools to navigate the final treacherous mile to profitability? The information is the new currency, and it is time to invest yours wisely. Hit that subscribe button, ring the notification bell, because we are breaking down these landmines and providing the definitive roadmap in every single video we release from here on out. And join the True Dinar Inside community in the comments below, and tell us which of these three landmines you believe is the biggest threat to your investment success right now. We read every single comment, and this is where the real and filtered analysis begins.